Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with a guest who needs no introduction in the resource sector, Jay Taylor of JTaylorMedia.com. Jay, thank you so much for being with us today.
Oh, my pleasure to be with you.
Jay, I want to focus on the energy markets today. We're looking at, really in the U.S., we saw GDP contract, or at least go below estimates, certainly. We're going into probably a deeper recession. When we see this, are we going to see a huge pullback in the oil price, or will the demand from the rest of the world be enough to keep oil prices near this $100 level?
That's a really good question. I think that we could see a pullback in oil prices, but that doesn't particularly bother me because there's a lot of oil companies out there that have production costs. So there's a couple of them that I'm following anyway that are doing very, very well. And in some ways, I think maybe when you get to really, really high oil prices, it actually constrains the global economy. So I think we could see a pullback. I think we're seeing some more growth in China and other places now that is sort of offsetting the slowdown in the U.S. And I'm very bearish on the global economy overall. So, but at the same time, there's supply considerations, and unless the world comes to a complete halt, people are still going to have to heat their homes and drive their cars and do the things that modern societies do.
Energy is like water. It's used by everyone. Modern societies, obviously, they need it. What is the future for energy? What sectors are you a buyer of right now? I mean, of course, everyone hears energy thinking of oil, but there's a lot more than just oil. What are some sectors that you're very bullish on right now?
Well, you say everybody uses energy. That's true, but I just came across a statistic that there was something like 2 billion people that in the world's population out of 7 billion that do not have electricity. And this, I think, bodes extremely well for the nuclear energy sector and uranium production, for example. I think it bodes very well in places like China, where they are continuing to expand their production or their nuclear power and nuclear energy capabilities, and expanding with new nuclear reactors are scheduled to come on. That hasn't really slowed down at all. And even in Japan now, with the new administration that came on there recently, it's very pro-nuclear. And there is even talk in Japan after Fukushima that they will actually start to use nuclear energy again and recommission a lot of those facilities. And the reason is because it's just so expensive. Japan doesn't have any source of energy to speak of, so they have to import oil. And they'll continue to do that to an extent, oil and gas, other forms of energy, but primarily oil. But they're also, just as a practical matter, are going to have to go back to nuclear. I think nuclear is looking pretty good now. First of all, people don't want it. Ever since Fukushima, it's been the dog of the investment community. Nobody wants to invest in it. And that's, if the fundamentals are strong, and I think they are, for uranium prices, and I think that's one sector that I would want to look at. We're seeing a lot of demand. The demand, the main issue I think that makes me bullish about uranium right now is the Soviet Union, or let's say Russia now, will no longer, at the end of this year, will no longer be selling their enriched uranium supplies from nuclear weapons, disassembled nuclear weapons, and so that is going to remove a sizable amount of supply from the market, and there just isn't enough uranium being mined to meet that supply. At the same time, uranium prices can rise very dramatically without that cutting off, without that hurting the economics of the nuclear power energy industry, because the uranium is such a small portion of the overall cost. The biggest cost, of course, is capital expenditures. Once you have that, once your CapEx is in place, the uranium prices, the U-308 prices, could go up to the moon, and it wouldn't affect very much the overall cost. So, I think that's looking very good at this point in time. And I'm sort of selectively looking at a couple of uranium producers, one in production and another one that's more of a speculative play, but one I like an awful lot as well.
We've spoken about Amir Adnani in the past. I'm a big fan of him with Brazil Resources. He obviously runs Uranium Energy Corp. That's been a big winner for a lot of investors. That's down significantly since post-Fukushima. If you could just give us your thoughts overall on UEC and the fundamentals for them.
Amir has done a remarkable job with UEC, Uranium Energy. I saw this morning it's selling at about $2.30 or something like that. It is down significantly in spite of the fact that he is the first new uranium producer in recent decades in the United States. He's doing it with in situ, with ISR mining, which they call, it's really a leaching process that is very environmentally friendly. CapEx is much lower than traditional mining projects, and operating costs are quite a lot lower. In fact, Amir was telling me the other day that his cash operating costs last year were something in the range of $18 to $20 per pound of uranium production. And longer-term contracts are bringing about $60. Spot contracts, which Uranium Energy sells at, I think Amir said he sold last year at $50. The price is now around $44. But you see, this is really at a very, very low price for uranium. And if my thesis is right, that we're going to see a significant increase in the spot price of uranium in the next year as the supplies stop hitting the market from Russia, then I think you're going to see a lot of investor interest in the new producers. Moreover, in the United States, the U.S. is producing only about 4 million pounds or 5 million pounds of uranium a year. Amir expects to grow this company from its production in Texas to 1 million pounds and then 3 million pounds. So down the road a little further, as he has various mines that come into production and are processed by their one central plant at Hobson, Texas. So I think the growth aspects for Amir's company, for Uranium Energy Corporation, is very good. Even so now, as people are not very interested in this sector, investors are still not paying much attention to it. I think it's time to pay a lot of attention to this company, Uranium Energy Corp.
Jay, last year we had Netanyahu in front of the UN talking about how Iran had 6 to 8 months. We've heard this from other people as well. This has kind of been something we've heard for a long time now. Actually, went back into the Bush administration that Iran was really close to having enriched nuclear, the ability to have enriched uranium to build a nuclear weapon. Do you foresee some action actually following all these threats finally in 2013? Not that I want it to happen, but I'm just looking at it from an investor's point of view. If this happens, and we are all speculating, what are we looking at in the energy markets?
Well, I think you could see substantially higher oil prices, and that might be partly by design. I mean, I hate to sound skeptical, but if you look at who really is the powers behind the throne and then start figuring out what's going on, well, I mean, I don't think that uranium should be considered to be a threat to the United States or to Israel. That's nonsense. I think it's saber rattling, and I think that there's a lot of oil companies that want to see oil prices higher. So I mean, we might strike Iran. Though I think probably less likely with this president than if we'd had elected a Republican. But whatever the case, if there's war in the Middle East, if we decide to go after Iran, then I think it could drive oil prices higher, and I think also make the case for uranium more attractive as well.
On the inflation front, the Fed's been buying bonds at $85 billion per month. And a lot of people would have said, hey, if I would have told you this was going to happen 10 years ago, you might have looked at it and said, wow, we're going to have some serious inflation issues. But today they're doing it, and we just aren't seeing that double-digit inflation or on the front page of the New York Times where people are suffering from inflation. What does all this printing inevitably end up to? I mean, what is the exit strategy for the Fed?
That's a very good question, and I think they believe they can control inflation by decreasing the money supply or by withholding or controlling it one way or another. I'm not so sure they can. I'm not so sure they can either stop deflation or stop inflation. I think the markets will decide that. But so far, the money's been pumped into the system, much like the 1930s. It hasn't gone very far. It just sits in the banks. And I think probably some hedge fund managers have the use of that money, and they use it to speculate in the commodity markets. So it has driven up commodity prices, I think, to a great extent, or to a certain extent anyway. And I don't know, but I think that's I think we've got a lot more inflation than the government says we do. Does anybody really, middle-class people in their right minds, think their cost of living is going up 1.7% or something like that?
Yeah.
That's total nonsense. So we are getting a lot of inflation. I think your purchasing power is going down dramatically. If you're fortunate enough to be able to speculate in the markets and make big money like the big bankers are in New York City and other elsewhere, then you don't mind if your grocery bill goes up a couple $100 a year. Who cares? A week or it's irrelevant to them. But to most of us, we're seeing something more closer to 10% inflation probably. So we are having a big inflation. Now, are we going to get a hyperinflation, a runaway inflation? I think that's possible, but I think the mindset has to change. And for the most part, most Americans are finding it so difficult to pay the rent and buy groceries. A large number of them. I mean, food stamps are. The number of people on food stamps are hitting record highs now in the U.S. So there's an awful lot of middle class poverty in the U.S. and it's growing. I mean, it's by definition, I guess they're not middle class anymore, but the middle class is being pushed into poverty. It's growing very dramatically, and there's still an awful lot of problems in the labor market. So as long as we have those kind of high unemployment and a lot of people looking for work and being satisfied to take whatever jobs they can get, I don't see the wage inflation. So I actually think that the danger could be on the other side, that we could see a massive deflation still because of the enormous amount of indebtedness that cannot be repaid. And as that debt, it just really squeezes people's ability, their disposable income is just continuing to decline. So I think we could have problems in either direction. Bernanke is going to try to fight deflation with more money printing. And I do think that if you had a more egalitarian way of distributing that money instead of just giving it to the fat cat bankers, that we could have a major inflationary problem. But so far, I think it's like, just put the money in the bankers' hands and keep the banks happy, keep them solvent, keep these guys with their big bonuses, and who cares about the average people? But it remains to be seen. I try to remain open-minded about this. I have put something together I call my inflation-deflation watch that is really a sort of a non-back-tested, non-scientific manner of trying to see whether the global economy is expanding or contracting. And since Lehman Brothers, of course, and the recovery since then, it has been expanding. And now I'm seeing a breakout through a pennant formation. Looks to me like we could be off to the races on the upside with the equity, with asset prices, stock prices, I think energy prices, gold and silver and that sort of thing. That should be very bullish. I think that investors that have some money are going to have to try to capture some of that upside because overall the economy as a whole, in the U.S. at least, in the Western world too, is not very strong. I think where the growth is going to come from, will continue to come from places like Brazil. Mexico is doing pretty well, and China, of course, Asia in general, India, places like that. But the Western world is sucking wind. And I think those of us that are fortunate enough to have some money in the Western world have got to try to find a way to capture and gain some of, to participate in what I think is an asset inflation bubble that's going on now. And then, God help us to get out of it before it collapses, because I think that's a very real possibility with huge amounts of debt that cannot be repaid. Strangling the Western economy.
Does this sovereign crisis with the national governments eventually spill into the stock market? Is that what you're saying? So you want to own stocks, but at some point in time you might have to rush to the exits. Is that what you're trying to say?
Yeah, that's exactly right. I think it's hard to predict, and I mean somebody said you can play this rally if you want to. I mean we're getting very close to new highs in the Dow, and you can play this if you want to, but you're also playing Russian roulette, is the way one person looked at it. So, I don't. It's the timing is everything in the market, of course, and if you can figure out when the tables are going to turn, you need to do that. But then, I like to look at defensive things again, getting back to uranium, where it is now. I mean, nobody wants to invest in uranium stocks. Nobody, in this sector. So I think you look at it and you realize that the economics and the elasticity of demand, it doesn't change much with a drastically higher price. And so I think at these low prices, a company like Uranium Energy Corp may be a good a good sort of safety thing, safe kind of a security to buy and put in your portfolio when nobody else wants it.
Jay, thank you so much for your time. Just a quick question. Are you going to Southern California for the Cambridge House show this month?
No, I will not be going to that one. There's only so many of these things you can go to. I'd love to go there. I'd like some sunshine this time of the year. It's very cold here in New York City, but no, the answer is no, I'm not going this year, unfortunately.
All right, sir. Well, hey, you have a great day. Thank you so much for your time.
Oh, thanks for having me.